This week, Strategy's share price continues to slide aggressively, and for many investors, this isn't really about Bitcoin anymore. It's about trust. The stock is down more than 50% since July. The premium that once lifted it above its Bitcoin holdings has completely evaporated, and now, with Bitcoin itself cracking lower, the pressure is only intensifying. But the trust issue didn't start with Bitcoin falling. That drop is shining a very harsh spotlight on everything that was already breaking. What's left behind isn't panic or anger, it's a growing sense of doubt, not in the mission, but in the message. So in this video, we're going to break down why confidence has faded, why the common stock now feels like it's carrying the weight of the entire system, and what strategy needs to fix before that trust can return. Like, subscribe, and remember, this is financial entertainment, not financial advice. All right, let's get into it. Bitcoin has now dropped below $100,000, and while that doesn't change the long-term story, it's making this short-term one a lot harder to ignore. Trust in strategy was already fading while Bitcoin held steady. Now that the asset itself is rolling over, it's starting to feel like the floor's giving way beneath both. The market's asking the question nobody wanted to face a few months ago: is the cycle already over? And if it is, what happens to a company that kept scaling aggressively while the obligations beneath it keep accumulating? This isn't panic, it's fatigue. Investors aren't doubting Bitcoin. They're doubting how this model holds up if we enter a prolonged drawdown. Can it function without a rising price doing the heavy lifting? Can it carry these obligations when Bitcoin isn't trending up? That's the real question people are asking now, not about the mission, but about the mechanics. And once investors started questioning whether this structure can really hold up in a prolonged drawdown, they traced the cracks back to where things first stopped lining up, because the real break in confidence didn't start with the preferreds. It started with the ATM. At first, the program was celebrated, a clever way to raise capital, buy Bitcoin and compound the position. Investors loved it and the stock soared. But this year, the story changed. A 3-year plan turned into 3 months. Guidelines blurred, thresholds shifted, and while the dilution itself was small, it felt relentless. It wasn't the math that broke trust. It was the message. Investors heard one thing, saw another, and started to wonder whether they were still partners in the vision or just participants in the funding as the company sells into their conviction. That's not a capital issue, that's a trust issue. And now, with Bitcoin dipping below 97,000, that trust problem has only grown louder. The cracks were already showing when Bitcoin held firm, the stock compressing, the premium evaporating, confidence quietly bleeding away. Now that Bitcoin itself is rolling over, the pressure's amplifying fast. The market's starting to wonder whether the tailwind has quietly turned into a headwind, and what that means for a company that's still buying at the top while paying a dividend to do it. When the premium was high, the model looked brilliant, self-funding, aggressive, unstoppable. But in a down market, those same features change. Dividends that must be paid, issuances that test patience, and a structure that starts to look more like a burden than a breakthrough. Yet here's the part people forget. This isn't a company drowning in debt or chasing hype. It's still sitting on 640,000 Bitcoin. It's still one of the largest corporate balance sheets in corporate America. So yes, the model's being tested. Yes, trust has cracked. But this is also where strong systems prove themselves. The question isn't whether strategy can survive a downturn. It's whether it can communicate well enough to earn belief again. Because Bitcoin doesn't stay down forever. And when it moves, the narrative can flip faster than people expect. Over the last few years, strategy hasn't just doubled down on Bitcoin, it's changed how it does it, again and again. From convertibles to ATM equity to accelerated ATM programs, and now to a full-blown digital credit model. Each move made strategic sense in isolation, but each one also changed the profile of the business, and the nature of the investment, faster than shareholders could adjust. That's where the trust issues compound, and not because the ideas were bad, but because the constant pivoting made the foundation feel less stable. Every shift solved one problem while creating a new layer for investors to decode. Now, the latest evolution is a structure built on perpetual preferreds, designed to keep the Bitcoin flywheel spinning even when the ATM premium disappears or traditional debt markets tighten. And on paper, it's brilliant. Perpetual preferreds allow the company to keep accumulating Bitcoin without relying on equity premiums or timing the credit cycle. It's flexible, it's global. It's the next step in Saylor's vision of Bitcoin as capital markets. But for shareholders, every new layer, convertibles, ATMs, preferreds, adds complexity. Every instrument adds obligations. And what was once a simple story, buy MSTR, get leveraged Bitcoin exposure, has become a maze of yields, structures, and perpetual commitments that many investors simply don't understand. And that's where the frustration really lives. It's not just the communication, it's the lack of clarity around the mechanics themselves. How do these preferreds get serviced if the premium never returns? How resilient is the model when Bitcoin chops for a year? What happens if the macro backdrop stays tight, or worse, turns against risk entirely? These aren't hostile questions, they're survival questions. And when the company doesn't answer them clearly, investors fill in the gaps on their own. And that's why shareholders are running. Not because they've lost faith in Bitcoin, but because they no longer understand how strategy protects them when the wind shifts. Without clarity, conviction starts to feel like risk. And that's what's driving this sell-off. Not panic, but exhaustion. And here's the irony. None of this is fatal. It's fixable. The problem isn't the business model. It's the communication around it. Investors don't need constant updates or hype. They need clarity. A simple roadmap for how the company operates through all conditions, not just bull markets. Right now, that roadmap doesn't exist. Nobody outside the boardroom knows how dividends are prioritized when the premium's gone, when ATM issuance pauses, or when, if ever, cash flow or Bitcoin itself are used to bridge the gap. And that gap matters more than ever, because if digital credit really is the new business model, then the details behind how those dividends are funded are key to that. They are the product. And investors deserve to understand it with the same precision as they would anything else. Instead, the lack of clarity breeds speculation. And speculation is the oxygen of fear. Because investors can live with risk. They just can't live with uncertainty. So when communication breaks down, every headline becomes a proxy for truth. It's not that Saylor's vision has lost credibility. It's that investors can't see how it holds together when conditions tighten. If strategy wants to rebuild trust, it doesn't need to reinvent itself again. It just needs to tell the story better, clearly, consistently, and credibly. Because right now, there's no question about what Saylor is building. The question is how he plans to sustain it when the market stops cooperating. Because let's be clear, this isn't a solvency problem. Strategy isn't drowning. It's sitting on 640,000 Bitcoin. The company could fund its annual preferred obligations with a single raise, or a fraction of its holdings, if it ever came to that. The system works on paper. The challenge is proving it works in practice, through bear markets, not just bull runs. Right now, investors don't want bigger ideas. They want proof of resilience. They want to know that strategy can run the engine without a premium, show that the preferreds can be serviced cleanly, and demonstrate that the Bitcoin stack can generate stability, not just narrative. Simple signals would go a long way. A dividend reserve and a pathway or hierarchy for how payouts are funded through each market cycle. Those aren't demands, they're reassurance. Because trust doesn't return through press releases. It returns through discipline. And strategy has all the tools to show it. The balance sheet is enormous. But the communication is lagging behind the ambition. Until that gap closes, the stock will keep trading on doubt instead of data. And here's the part that common shareholders feel the most. Yes, the preferreds bring in Bitcoin. Yes, the common inherits more Bitcoin per share over time. That part of the model does work. But when the common compresses for months, when the premium disappears, and when the stock trades like the only thing it's good for is funding obligations created above it, the signal is unmistakable. The common is carrying the weight, not sharing in the reward. And until the common starts to benefit, not just in theory but in practice, that perception will keep driving sentiment more than fundamentals. So yes, trust has cracked, the message is muddy, and the market's patience is wearing thin, but this isn't the end of the story, because even with the recent sell-off, Bitcoin is still hovering near six figures, and strategy still controls more than 3% of the total supply. Nothing about that is broken. What shareholders want now isn't a new idea, a new instrument, or a new pivot. They want clarity. They want to understand how the company manages obligations when the wind shifts, and not just when the premium is strong. And look, anyone investing in Bitcoin or Bitcoin proxies knows volatility is part of the deal, but this moment is different because the drawdown isn't just in price, it's in confidence. And confidence comes from communication, not market conditions. The premium can come back, trust can be rebuilt, but it won't come from the next announcement. It will come from proving the structure works in hard times, not just in momentum. If strategy can do that, if it can show discipline, transparency, and a roadmap through tighter conditions, then this entire episode will look less like a failure and more like a turning point, because when Bitcoin finally moves again, the same mechanics that feel heavy today, the perpetual capital, the global credit rails, the asymmetry will flip back to being strengths. The story isn't collapsing, it's being clarified. And the test right now isn't about Bitcoin, it's about communication. I'm Seymour Satz, thanks for watching. See you in the next one.